Hello, everyone. My name is Alejandro Ramirez Limas, and I have Serhii, my co host. We are going to be talking about market trends and market geometry today. Serhii, if you want to introduce yourself for our viewers, please.
Hello, everyone. This is Serhii talking. We are pleased to see you on our podcast. And today, I think we will have a deep dive into the patterns of the market and the causes of these patterns.
Okay, so without further ado, I'm going to go ahead and share my screen. So, what we've been noticing for some time now is that we have a pattern that is repeating, and it started last year and it ended in April, right? So, if we look at this time window here, we noticed that this pattern went from it basically went for 1 year. It went from April to April. This is when the pattern started. We had this deep, deep, deep drop, and then it ended in April. So we had a spike that started right around October, and then it ended in April of this year, right? And then again, we had a huge spike, which is what we're seeing right now, and then we're entering the period of a drop. So what we are looking at this very moment is this particular pattern that's happening here, this window. So if we go here and we compare this window to the same period this year, you'll notice a very similar shape in the geometry of the stock market. So now for anyone who is not fully aware of what we're looking at, this is the SPY stock, which is a representation of the S&P 500. So if you notice, we have this mountain that we see here where the market went up and then it dropped all the way down. And then this ended on April 1st, March 31st, April 1st. That's when it entered. So now we're looking at here, we're now on March 16th. So what we are looking at, if this pattern continues, is that we are now entering this period of a deep drop in the market, right? So we're going to be looking at this window here, and we're going to compare that to the market today. So if you notice, this ended on March 31st last year. So if we have followed the same pattern right now, we could say that this may end on April 6th. So in about 3 weeks, we may start to see a rebound on the stock market. So what was happening last year around this time was that there was a lot of tariffs that were being put into countries, and a lot of people got very nervous thinking that prices would go up, and because of that, people would stop buying goods and services, and that would cause um, massive sales where all of a sudden people would no longer be buying products and services because they would be trying to conserve their revenue, and because of that, the prices of things would go up, and eventually they would drop back down, and we would end up in basically a recession. But that didn't really happen. What happened was that in April, everything just rebounded, and we entered this massive spike of the stock market. The pattern seems to be repeating. So what I'm going to do is I'm going to show a closer view of what is happening right now. So if we see this here, this from the left and the right, these two trends, I'm trying to remove this here, you see last year, this is what was happening from February 28th all the way until March 13th. And if we look at the same pattern here, you'll notice that the exact same thing is happening, right? We have this huge drop. And what's really interesting is that the same patterns seem to be prevailing. First, you have a spike in the end of February. Then you have a drop with a small spike, and then it just continues to go on a downward spiral. Now, this is 2026, and it's the same thing. First, we have a spike. Then we have a huge drop. Then we have another small spike again, and then it continues to drop. So, what we're thinking when we're analyzing this is that because these patterns were happening last year, was there other times when we saw the same patterns? And sure enough, there actually were. If we look here earlier, we'll notice that during the same time period, back in 2018, all the way to 2020 for 1 year, this is literally what happened. And if we move in a little bit closer, we'll notice that the same pattern was happening, right?
What
And
was the
we
cause,
said
by the way, of the
2020,
patterns?
this was the pandemic. So this is when the pandemic happened. So when
So
when the
like
stock
disruptions of the market like start, like
correct.
it is similar, right?
Yeah, we have all this disruption of the markets. When that happened, everybody was like, you know what, the market is over. We're gonna just sell everything and keep our cash. But then actually what happened is that after this drop that happened here, we see a huge spike in the market, right? This is when we enter this period of growth that has been prevailing until now. So if we see these patterns that continue, we usually have a spike that is followed by a drop, and the drop tends to end in March. Now, during from the year 2020 until the year 2024, or from the year 2020 till the year 2022, we had a different presidential administration. So the pattern is not something that is directly related to the administration. It just seems to be something that continues to follow. Because if you notice here, we have a drop all the way in March 2020. And then here we also have a drop um, right around the month of March. And then it continues to drop, right? So we always see that there are spikes that go all the way up to February with drops that happen in March. What is happening now is that we see a much steeper drop. But if patterns are going to continue to repeat, we're expecting that in the first week of April, right around April 6th, things are going to start to stabilize and possibly start to grow again. And so this is what we're seeing on these patterns, and this is what the podcast is going to be about today. Sergio, do you have any comments on this from a
It's
mathematical point
pretty,
of view?
this is pretty interesting. Like, when something like strange happens, like war or other like stuff, and it triggers this like sell-off behavior, and then triggers more sell-off behavior. And before that, you have the periods where everything grows very like steadily and slowly, and then this rapid fall happens. And after that, usually, like as we see by the pattern, like again, it gets absorbed by huge capital and like reverses, and we have this like again steady growth. So it's pretty amazing how these things happen every time, not only on Standard and Poor's. So there's a lot of identical events on other markets, like crypto markets as well. So if you guys
Yeah.
like tell a little bit more, like what do you think about the mechanics? What else can be the cause? Probably not only the sell-offs of people, the trigger, like other events, but it will be pretty interesting to hear.
Yeah. Well, one other thing that we can present to give some perspective on what we're showing is if we look at the safe asset portfolio that we created, if you notice, all the stocks that were doing well previously, they're actually having drops, but their overall total gain has continued, right? So they gain its drop, but now the total gain has been holding at $4,400 basically. So based on that information, like what we can what we can extrapolate is that we are entering a period where there's no more growth on this safe assets. So people are very likely going to start moving their funds into other assets or just hoarding cash for some time until everything stabilizes. So again, what we need to do is we need to continue to watch the news, continue to pay attention, and be prepared to enter the market once things hit bottom. And our expectations is that things are going to hit bottom around April 6th, but obviously we cannot predict the future. We can simply follow the math. And that's what
Yeah,
this podcast is about.
everything might
Follow the math.
happen. Yes,
Right?
everything might happen. So the safe option for now just to sit in cash, because it can be like the beginning of the bear market. Who knows? But if not, so six
Right.
April, that what do you expect the market will reverse, right?
Yeah. And one of the episodes we're going to record is what do you do when you're just sitting on cash? How do you buy government bonds and other assets that are guaranteed to give you a return? So if you do T-bills or government bonds or other assets in this manner, you're going to be getting a better return than if you just sit on your cash. And we're going to record another episode about this. But for now, we're going to leave you here with this section just to say, watch the math, watch the news, continue to be alert. And we are expecting that there will continue to be a drop for another 3 weeks before things start to balance out and then spike. If I was a betting man, I would say we're looking at about April 6th before we see any stability. Do you have any dates in mind, Serhii?
We'll see. We'll see.
Okay, so no dates from
Pattern
you.
say about this.
Yeah.
Yeah. So the pattern says this, but we'll see how it goes. Sometimes they can be misleading, but sometimes they can give you like pretty good insights.
Well, I am.
Meaning yes,
Yeah.
yeah.
From my perspective, I'm gonna keep my money safe on government bonds until I see that we've hit rock bottom, and I believe this will happen around April 6th. But I can't predict the
The risky ones can try to play some short during this period, but if you're not risky, it's better to keep everything in cash. I mean, like
Yeah, I mean
dollar.
that makes a really
Right.
good point. Yeah, right. You can always like short your stocks, or you can take bets against the market, like where you're basically saying you could sell calls and puts right now to individuals who will continue to see the market drop, or you can buy calls and puts for the same and hedge your risk. Right? There's a lot of things that people can do during this time of volatility. Me personally, I don't like to really take huge risks. So because of that, I'm just keeping my money in government bonds until I see that the market has hit rock bottom.
Yeah. And government bonds give you like 4% return guaranteed for the year.
That's right.
So at
That's
least
right.
stay safe from inflation. It's also
Yeah.
a pretty good option. Safe fund.
Exactly. Exactly. Okay, and that's everything we have for today. Thank you all for watching. My name is Alejandro, and my co-host is Serhii. And we will see you next time.
Subscribe, like us, leave
Subscribe,
like
like
what you
us.
think about the situation, how it will end up, and give you forecast as well. We would like to read and to hear about from you.
That's right. See you all next time.